Hey guys, welcome back to another week of fundamental analysis from the 16th to the 22nd of September. We will go through our analysis for the week and then I'll show you the trade I'm currently still in, as well as my thought process on potential um, other trades within the coming week. So let's start off with the analysis. COT data for 17th of September. We see volume taken out of the US dollar. We had rate cuts this week for US dollar, and it was 50 basis points rather than the expected 25. So I'm not surprised with the volume change, not surprised with the bias change. Everyone's sort of getting out of the dollar. We can see a 11% bias change for US 30. With the 50 basis points cut as well, and needing to stimulate the economy. Very happy with the indices and where it's tracking, as well as commodities. So oil, gold, silver, you can see still bullish, especially look at the change in volume for silver, and still very bullish. So all in all, very good indication to start trading alongside for what I'm trading, and we will go through that towards the end of the video. Data wise, we had the big one was Fed rates. Again, we had an expected 25 basis points, which got cut to 50 basis points, which I've included again in my little pointing system. So two points for bullishness for gold. As well as we had core retail sales, which was better than expected. We will go through this in more details. So you can see a bullish shift in gold, no change in oil. Again, this is just semantics. I'm building a bigger picture by just reading the news and sort of gathering data that way to sort of see my bias. So even though oil has a better reading than gold, I'm more bullish on gold than oil. Now, this week's data, we had core retail sales, Fed, and statements, which was probably the biggest thing. So I've highlighted that twice. And I didn't really go through the other data, to be honest. Everything was as expected for the other currencies. So focus on the USD. USD, we had the Empire State Manufacturing Index. This was the first time it was in expansion for nearly a year's worth of time. There was new orders and shipments that were the standout increase, and new orders being, quite a leading indicator for signs of recovery, as it sort of leads to more jobs, and as more jobs, more work, more money, right? Core retail sales. So we saw that consumers continue to spend despite the labour market slowdown. I did read the news from ING, which was expecting a 50 basis points cut themselves. They don't consider this reading, even though it's a... Oh, no, it's not. I think we were reading on this retail sales, not core retail sales, as being better expected. But anyways, ING News states that bullish reading on retail sales is incorrect, as the top 20% spend more than the entirety of the lowest 60%, and therefore the top 20 is in good shape with inflation steady and interest rates high, whilst the lower 60% suffer from day-to-day spending. So ING just sort of pointing out, even though the numbers look good on paper, we know it's very top heavy, and that the Pareto's rule, 20% spend the 80% or whatever that is. So we know that, obviously the top 20 is doing well, the lower 60 isn't doing too well. So there's still that that labour market, that jobs sort of necessity for the rate cut, which was cut 2 days later when we had the federal funds rate and FOMC meeting. So Waller stated that the committee has gained great confidence that inflation is moving sustainably towards 2%. So again, just sort of highlighting inflation is being controlled, and we should be focusing more on labour market and employment now. Major catalyst for the 50 basis points cut instead of the 25 was the most recent Federal Reserve Beige Book, which I don't know what it is, I'll be honest, I was just reading it, but it did show that only 3 out of the 12 Fed bank districts reported growth. So what 25% was growing, the rest were, not growing, suffering. Waller expects continual 25 basis cuts on continuous meetings, um, depending on the data. So again, just suggesting we got to really watch the inflation data to see it's controlled. Obviously, we know or we can assume with good probability that employment data is not going to be the best because of the high rates for the last year. So what I want to do, this is again, it's not financial advice for you guys, but it's just logical sort of the way I'm thinking is, well, if we know if we can sort of agree that employment data and labor market data isn't going to be great, well, we want to watch inflation because, as Wallace says, if inflation is controlled, it doesn't go any higher, then we can keep cutting rates and we can keep stimulating the economy. And then just to note, November 8th is the next Fed statement and rate indication. So it'll be very interesting to see what happens November 8th if we get another 25 basis rate cut. So what I'm going to do now, guys, is I'm going to do things a little bit more different in the sense that I'm going to pop all these into my slides. And I'll make a highlighter for every time it changes during the week. But we're just going to start with the ones that changed this week, and we'll slowly add on everything. So we can see Fed rates was at 5. It was increasing in 2023. During mid-23, we kept it at 5.5 as we wanted to control inflation, and now we have the first rate cut that was more than expected to the 5% mark, 50 basis points cut, and that's a very good indication for gold. Again, as a safe haven where there's poor economic conditions, people want to put in a stable asset. So gold, I'm very happy to trade that long, as well as my commodities, other commodities, as well as indices. Again, rate cuts trying to stimulate people spending more. People spending more means they can put their money into different asset classes rather than a high interest sort of bank. All these others will skip. We'll go retail sales. Also, I've got a rating system, guys. Out of 5 retail sales are popped in. This is personal opinion. I'll probably put it as a 2.5, 3, and it's just an indicator of how good the economy is going in terms of people spending. So you can see during during our 5.5 interest rates, spending was patchy, was up for a period, down, up, down, and not too much. You can see with that part in early 2023 where spending was heaps, and then it just shot down. So we're sort of fizzling right now. Again, going based off what ING news is saying, that it's not really a great indication. We can just use the general shape of it, but things like the top 20 spending almost exactly or more than the lower 60, we can just use this as an indication of, hey, look, the spending right now is doing okay. Let's use the other readings to cement how the economy is actually doing. So not too much to say on retail sales, to be honest. Okay, that's the other ones done. So next week's data, we have flash manufacturing PMI and services. I want to have a look at our cash rates in Australia. I'm expecting it to be the same, to be honest, because we didn't elevate it too high. We left it at 4.3. So I think a couple more months of this cash rate is required, in my personal opinion, just to flush inflation, keep it in check. We have consumer confidence, which is another indicator for the economy and spending. So that'll be very interesting to pair with retail sales we just had. We have final GDP, which is again, it's a final reading, so we can see if there's any revision in the GDP. And then we have Powell speaking on Thursday as well, which would be great to see after we get PMI, consumer confidence, and final GDP. Very interesting week next week. So my take home. Perfect condition for gold with 50 basis points rate cut. I'm very happy to trade gold long. Oil, I'm going to stay on the sidelines for. I'm not too sure what to do. I will be honest, I don't know what a 50 basis rate point cut would do for oil, whether that's bullish, bearish, I don't know. So I'm not confident. I'm not going to trade it, but I am confident in indices and US 30, especially with the COT data reporting more longs on the US 30 side. So we're still with the long stance for US 30. In terms of a chart to chart point of view, let's just go through my trade. So we actually took out, we did take out some win for gold, and I'll explain why. So actually had a 3.4 risk to reward trade taken out. Mind you, this was one position, so I'm still trailing on my 0.2 out of the 0.7, which is what 20% still position size within the 400. So what I'll do is, once I get out of this position, I'll average it out, and like based off the percentage, obviously I'm not saying this is 50-50, I'm saying this is 20 out of the 0.2 out of the 0.7, this is 0.5, so I'll make the calculations and I'll come up with a proper risk to reward and P&L. But the reason for it, which I'll explain, guys, is we have gold here. If I do bar replay, it would have hit somewhere here where I took my position out. Yeah, around somewhere here. You can see we are at all-time highs for gold. The last thing I would have wanted is for me to keep my stop loss here. So I've moved it here now, based off this new data here, right, where it pumped up. So and we've got this support area here now. So the last thing I would have wanted is if it didn't pump up and I didn't move my stop loss, right? So if we had data here, the last thing I would have wanted is this to happen. We were up 3.5 hour. Mind you, just to keep in mind, I kept my stop still here. Okay, so the last thing I would have wanted is for this price to come back down, maybe even come up a bit from here, and then take me out. Right? I was up 3.5 hour, and I get taken out for like a 0.1. So what I decided is we're at all-time highs, we don't have any structure to work with. Let's take out a small position, right? A hefty, no, not a small position, a 70-75% position, and let's trail the other one so we're still in the trade. So now that that's pumped up, hey, we've got structure now. We've got structure to work with. I could put it here, my stop loss here. I like to trade here because I'm thinking of entering again, right? So if we go on the 4 hour, what I'm thinking is for price to come back down here, pop another trade here if it does, put it below structure here, maybe even here, we'll see. Most likely I'll pop it probably here, right, where my stop loss is sitting. Actually, we'll change the stop loss to here. Okay, so pop it here, get in another trade. Maybe it doesn't have to be the full 1%, it could be a little bit lower, but have another trade here. So if price does slip back down here, we have another trade, we're in another trade, we can trail and hopefully get a bigger risk reward here and another new trade here. So great setup. Very happy to see what plays out of this one. Right, we've got some really nice zones to work with right now. So yeah, very happy to continue to trade gold. Let's have a quick look at the US dollar while I'm at it. You can see we're going down, trending down. That's all I needed to know. Just the way it's trending. We got a 50 basis point cut, so I'm expecting it to go lower. Oil. I just want to have a quick look at oil. You can see oil has been trending in the last week. Last fortnight has been trending up. Again, I'm not confident to trade oil right now, so we're going to leave that alone. US 30. US 30, we're at all-time highs now as well. We did break this resistance quite comfortably, so now that's gone. We go on the 4 hour. We have this range area here, right? What I want to do is, let's have a look. Okay, so this, what I've marked as support, resistance turn support, is actually between 50 to 75 retracement. So, or pullback. We can take a cheeky trade like that, right? To take a cheeky trade there, or if we get stopped out of that one, we can also take a cheeky trade here. Alright, so good setups. I'll pop my alerts in here. I'm happy to trade these two zones here. Right, so I'll put another alert here. These two zones I'm happy to trade in. Sizing wise, let's have a look. Yep. So sizing wise, we'll have to take a calculator out for this one, for US 30, but I'll manage to position properly for this one. Risking around 200 USD. So yeah, that's it for the week, guys. I am more confident in my gold, to be honest. So hopefully we can get a retracement and I can enter another position on gold. But yeah, very happy with this week. We are finishing September shortly, and that would be 3 months of consistent gains if I can end this month, without too much of a loss. Yeah, hopefully we can get another winning month, and we can continue next month and next month and next month. Obviously, we're gonna have red months coming up soon. I'm expecting it, but just to control that drawdown. Alright guys, catch you on the next one.